Good morning. It's Monday morning, July 23rd. This is George Kachuk with Know Your Options Inc. coming to you from the CME Group trading floor in Chicago. This morning, equity markets are getting whacked across the board. Dow's down about 200 points, Nasdaq's down about 64 points, and the S&Ps are down about 22 points. Excuse for the sell-off is again, we're back to the same old thing. Fears of Greece defaulting and the IMF's going to cut off their funds. And then, of course, Spanish bonds are soaring to new highs. So technically, let's take a look at where we are in the Nasdaq market. Last week, the week started out pretty good. We had a few solid days of accumulation and higher volume. However, the air got taken out of that balloon on Friday when the Nasdaq sold off pretty hard at an increased volume. However, the Nasdaq's been able to stay above the 2,900 level, which we kind of viewed as support level. This morning, that's broken. Furthermore, the Nasdaq is below its 50-day moving average at about 2874. So right now we're looking to see how that Nasdaq acts at about 2850 to 2800. If those levels are broken, it's definitely might be over for this uptrend for a while. The reason I say that too is we have 5 days of heavier selling in the last 3 weeks on the Nasdaq. Not that pretty of a picture. If we look at the S&P 500, faring a little bit better. S&P 500 also stayed above the 1360 level, which we viewed as a support level. Cracked through that this morning. S&P is now at about 1340. We're looking to see if they can hold the 1333 level, the 50-day moving average. The S&P, the reason I say it's faring better, it only has about two days of heavier selling over the last 3 weeks. Not too bad, and last week we had 3 solid days of accumulation. However, that can all be negated. Fundamentally speaking, fear still rules the day. The 10-year yield on the 10-year Treasury notes are an all-time low this morning. Even though the S&P companies that have thus far reported, about 2/3 of the companies reported beat estimates. However, revenues on half of those came in below estimates. So we're getting a mixed picture on that. Now, what do you do at a time like this? Okay, the point of least resistance is obviously to the downside, but we might take a look at a few contrarian indicators. Now, if we look at that, we have the American Association of Individual Investors that does a sentiment survey. Right now, they're showing the percentage of bulls is only about 22%, and the percentage of bears is about 44%. That's a pretty good contrarian indicator. You see those kind of levels near market bottoms. But of course, these indicators, they're secondary indicators. This can go on for a while. This can go on for weeks or months. If we look at the put-to-call ratio of options, again, spiking above 1, again, the type of thing you see near market bottoms. And of course, if you look at the NYSE short interest ratio, again, is near a 5-year high. So we have a big sell-off coming off, and if the volume stays strong today and we end up in the red, probably going to say the market's in a correction. However, we look at these contrarian indicators, which might give us another view, meaning that the fear is so bad, situation may be oversold, and we might still continue this uptrend. So again, let price and volume be your guide. This is George Kachuk with Know Your Options Inc. coming to you from the CME Group trading floor in Chicago.